1.
What a week. We got to put everything into perspective. For last Friday's close, we're pretty much there, 30 handles away. A lot of stocks have come all the way back, and some are even above the close from last Friday. And others, well, we know some others are quite a ways away from that close. Two guests today, 810, Hayden Buckfire, his last day as an intern at Benzinga, going to wrap up the summer for us. 835, the moment you've all been waiting for. Craig Johnson, Piper Sandler, managing director, who gave us pretty good heads up a while ago. We'll talk to him about the markets. We'll cover earnings, whatever else you guys want. It's Friday. It's pre-market prep.
Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, we've been up, we've been down. Let's call it flat here, just under the close, 53.46. The buck is kind of flat too. A little bit of a bid in the TLT. Crude up 53 cents, trying to get in the 77 handle. Gold pretty much flat, 24.66. Silver down a few pennies at 27.56. Bitcoin futures, they're up 12.60. Getting all those losses, filling the gap on the chart. And what everybody cares about, the EWJ is traded down. Let's bring in Triple D and AB simultaneously and get the show on the road. We're going to be organized. No Tangent Friday.
No Tangent Friday. I like it. No Tangent Friday. Not even one tangent. Not even tangents about tangents. No tangents. AB?
Okay.
No
All right.
tangents.
Committing to no tangents here. That's a big task.
That's a big
for us,
commitment
but
for me.
we will stay on task today. So
We don't even know what to talk about if we don't have
where
tangents,
do we
though.
want to start?
That awkward silence for like 1 second there. That's a tangent in itself. Stop me. Okay. Here we go. Stocks.
All right.
Overnight action. Joel, Japan, down. S&P
Yeah.
leaking. Tell us about this S&P. Let's just go into it one more time here.
Just
We
got
have
to
a
look
slight
at it.
leak in the EWJ, and it's equal to slight leak in the S&P here. We know we're linked here with the EWJ. EWJ at this current time is indeed trading down. Don't look at down 15 cents because that's your bad Robinhood ticks. It is actually down almost 1% here right now, offered at 65.05. We're down about 0.9%. So that's not nothing. And I think the S&P is taking note, and I think that's why we've leaked our overnight gains.
Well, you and I were talking stocks, we were talking markets and stuff. Right now, it's much easier to identify resistance here, right? I mean, really all the highs. And I know we bumped up to 53.72. That was near the close, and we got a nice pop on the close yesterday. But you have not one, not two, not three, not four, potentially five highs in the same area. That's resistance. But then when you go to try and find support, I mean, okay, yeah, the pre-market low, 15 handles away, but really good support. Like if you're getting long here and you're saying this is it, we saw a generational bottom, we're busted through. Where do you cut out? Where do you say, on the other hand, if you take a short, you're like, hey, this is just a dead cat bounce. You have a place to cover. So that's the way I'm looking at it. I'd love to see us close green today, above that, green for the week. It's just my spotty feeling ain't going to be so easy.
And I think it's going to be a lot of chop again. I think we saw a little bit yesterday, but yesterday was a pretty smooth ride for the bulls. We thought there might be, at least I thought there might be an end of day sell-off. We really didn't get much of that at all. We dropped 20 handles, in the last hour, but really didn't drop much at all. So the bulls had a fantastic day. They were prancing around, dancing around, saying this is it. You guys all suck. You bears are wrong again. And you know what? That may be the case. Maybe we did see the bottom. It's to be determined. And what is going to determine it is how far we can get away from this carry trade. Maybe people even forget about it. And what's going to forget about it is if the yen stabilizes or actually starts to depreciate, that helps the people who are in the carry trade. So still keep an eye on your FXY because that isn't moving this morning. Not really moving much at all. But as long as you don't see any violent moves higher in the FXY, we're probably, okay for now. But I would keep an eye on that.
Yeah, I mean,
Earnings.
let's go to some earnings that we had. We also have some big pre-market movers. Let's start with Elf. That was one of the bigger ones that we got last night. So Elf yesterday after the close reported EPS of $1.10, beat by 26 cents, revenue of 324 million, beat by 19 million. But they gave an underwhelming outlook for the rest of the year. And we've kind of seen this with Ulta as well, where the CEOs or the executives of the companies have come out and just said that they've seen kind of a slowdown in consumer spending at their stores. So even though Elf's top line numbers were pretty good, beat on the EPS and revenue, that underwhelming guidance here kind of hitting the stock. It did get all the way down to 164 before coming back up to 176. So you did see some volatility in the stock. Right now, as it stands, we're trading down about $19 or 10% on Elf Beauty as we head into the open.
It's a tough stock because valuation, I think I did this exercise before, but it's always a good idea, when just to paint the picture. I know there's so many technical traders like, we don't need fundamentals. You need to combine it. I still think the best approach is the combined approach. You can come in and say, yeah, I'm a technical trader and I only trade technicals and I don't care about fundies. But there's, a combo approach I feel like is just a better approach. Let's just give you perspective on Elf. The stock is trading 85 times current earnings, 54 times forward earnings. What have I been talking about? When growth starts to slow, there's no value investors that are anywhere near this thing. So you have the Momo guys that are in Elf, we don't care. And then you have the value guys that are sitting at like $80. Not joking. They're down at like $80. So I'm like, there's a huge gap here. So if momentum slows, if you get this, if growth starts to slow and if the stock's momentum starts to slow, the momentum guys want out and there's nobody to sell to because the value guys are so much lower. That's what I'm concerned about. We saw it with Celsius. We saw it with Lululemon. I think Elf sets up in a similar way. So even though I'm a dip buyer, I'm not a dip buyer on Elf Beauty.
By the way, Celsius, it was a buy yesterday. Remember when the guy downgraded it and I said,
Well, he downgraded the bottom.
Yeah, I was.
It bounced straight away.
Slight tangent there. You know what? I'm just going to take a pass on this thing because this is a messy looking chart. You can see the major support. It had the big gap down. And then the reason I'd be cautious on this one is I look at Estee Slaughter. I mean, holy macro. And I look at Ulta. And I mean, I don't know. I just that there's no AI in makeup. So I'm out on these. I'm not even going to try and give any levels on these.
You know what's very interesting, just to go back on another tangent here, but it's a tangent to the markets. The S&P is rolling over a little bit. The Q is rolling over a little bit. IWM is actually rallying. So we're getting back to, remember what we had before we started talking with the carry trade, was the IWM and the QQQ going in opposite directions. Remember that one day where QQQ was, I think, down 1.5% and the IWM was like up 1.5%. It was like a 3% blowout, which was the biggest gap in like 7 years. Remember that day? So if we start to not worry so much about the carry trade, question to the chat, question to you guys, do we start to see this separation again start happening where we start to see the IWM, having its time and the QQQ are just going in opposite directions? So today it seems like the QQQ and tech stocks are relatively weak, where we've got the IWM, not nothing rally, but a something rally. It's notable because in the last few days, when the VIX starts to elevate 40, 50, 60, all stocks move in the same direction. A stock is a stock is a stock. But when you start to see the VIX come back in, maybe we go back to the market we were in previously where there's actually, separation and stock picking and not all stocks moving in the same direction. Yesterday, they were all moving the same direction. It was like every sector was up yesterday.
Yeah,
it was really like an everything rally. Today, we're seeing back to the mixed market. And we were here 3 weeks ago where, remember, IWM was taken off and the tired tech stocks were tiring out, and then obviously the carry trade came and punished everything. Do we move back into that type of market?
Kind of feel, I mean, today,
Today it feels like it.
Yeah, I'm looking at Google down 244, Apple down $1.97, Meta down 633, and these are the stocks that have really gotten back a lot of the losses, right? Not so much Microsoft, but Apple. After, I mean, still considering what Warren did to it, Amazon still got a gap to fill. I mean, you just one day blip or resumption of the trend. I still think the IWM, though, just overall, it's been that underperformer, and it has its periods of performing. But until we get sustained interest rate cuts, which everyone's talking about, I don't even know if that's going to help it. There's a lot of weak companies that in that IWN. But let's just do a real quick interview here, and then we can get on with the markets.
All right, we got our man Hayden Buckfire hanging out backstage. Last day of his summer internship, has written more than 170 articles this summer.
Holy
for
mackerel, that's more
Benzinga.
than I wrote in my whole life.
He's a machine. Without further ado, let's bring Hayden on the stream.
Hi, Hayden. You tired about me bragging about you yet?
Oh, we got
he's on mute. He's got some Elconin in him somewhere there for sure when he's on mute.
I'm a little bit distracted here. It's my final day. I'm counting down the hours.
How many articles
He learned
did you
that
write
from
yesterday?
Joel, though. Hayden learned that from Joel, so he gets it naturally. He learned that from his uncle.
How many articles did you write yesterday?
I wrote 5 articles yesterday on a variety of topics. It was a great day.
Yep. Hayden's the weather expert. What's been your most read article?
My most read article is about this is a few weeks ago. It was about the Russell 2000 beating the Russell 1000 by 4%. It was that one day, and it only happened.
What talking about?
Yeah, it only happened, I think, like 3 or 4 times in history, and the only times it happened was like Black Monday. It was like the financial crisis, COVID. It was pretty interesting.
If I was reading Hayden's work, I would have had all the stats behind me there because I was trying to remember the stats, and here Hayden wrote about the stats. So how has it been, though? So just to clarify, if people don't know Hayden, he's been an intern at Benzinga here, and it's his last day here. He's got to go back to school, obviously, but how is it at that Benzinga? How are these guys? Are these pretty good to work for?
Yeah, it's pretty good. They treat us all right. It's been great with
they make you write too much, though.
Probably.
Okay.
Probably.
How many views did that article get? That article.
It's hard to say because it could be republished elsewhere and stuff like that. But I think it got like 40 or 50,000 views. So a lot of people are reading this.
That's something.
And then you had a big Tesla article, right? That you did. Yeah, something about it was kind of, you couldn't believe it how it caught on. What about, do you think the yen carry trade is over?
Well, I wrote an article about this a few days ago, and a lot of people think it isn't over. I can't say I'm an expert on foreign exchange or anything like that, but I think the logic says maybe there's a little bit more room to go.
Okay. All right. And just, overall, could you give us like 3 takeaways? I mean, I know you follow the markets, and I know we follow politics, and we follow, everything closely, sports and everything. People don't want to hear about sports on this show, but could you give me like just overall, like 3 takeaways before we let you go? 3 takeaways from working in the markets this summer, and how you're going to, going back to school is going to be a sophomore at the University of Michigan, working on the daily, also may do some editing for the daily. Give us 3 takeaways from the summer.
Well, first, go blue. I like your shirt there. I think my biggest takeaway is covering the markets, what experts think, economics, is that as technical as these fields can be, I think the experts often have very simple answers to problems or things that come up in the markets. And I think that's not a bad thought process to emulate.
Okay.
I think
number 2.
I think another takeaway has just been the interconnectedness of social media and how important social media is now. Twitter for the markets. I know all of you are on Twitter and post pretty frequently, and it seems like it's all happening there. Definitely looking into the future, a few years from now, I don't see any signs of that slowing down.
Okay.
And
Okay.
you also mentioned before about weather. I think I've kind of been Benzinga's maybe top weather correspondent over the last few months. And yeah, it's getting serious. I think it's been interesting writing about how these extreme weather events can affect the markets and affect certain industries.
Perfect. Hayden Buckfire. He's my nephew. He's finishing his last day as intern here at Benzinga. He'll be joining us periodically during the school year. He's got to get his studies together first. But all right, Hayden, great articles, and your articles are still out there. You'll probably get a lot of them out today as well. So talk to you soon, buddy.
Thank you for
Thanks,
hopping on,
Hayden.
Hayden. All right, guys. Shout out Hayden. I mean, one of the best summer interns we've had this year, probably ever at Benzinga, has done a
Whoa.
great job with his articles. Joel, we got to find a day to go up to visit this fall. Maybe go to a football game at the big house. That's what they call it, right?
Yeah, I'll take you to a game, AB. We got enough tickets. So where were we? We're doing earnings. Do we?
Yeah, we were doing earnings, and we just covered, and I think we should cover Take-Two and Unity. Somebody in the chat wants to cover Unity. Maybe this is a good one. I did the closing print with you last night, Joel, and we said about, I think the dip gets bought on tech stocks because we had such a good day, and it's often just the setup into the day. When you have a rip-roaring rally, and somebody's been left on the sidelines, let's say money managers left on the sidelines, they'll be looking in the after hours for dips to get in on. So I actually mentioned two stocks, Take-Two and Unity. And I said, these stocks dip, those dips are likely to be bought. I actually tried to buy the Take-Two dip, and it was just too fast. The Unity one was down there for a while. So I think we covered both of these. Let's start with Unity. Somebody in the chat was asking for Unity. Let's talk about it here. Stock's been an epic disaster, but did we wash out? Are we washed out on this? I don't know long term. Short term, though, they're looking for tech stocks here now, and this one hasn't gone anywhere.
Unity reported Q3 revenue, or sorry, that's their guidance. Q2 revenue came in at, or sales came in at 449 million, beat the 439 million, so beat by 10 million there. EPS loss of 32 cents, that beat the estimates of a loss of 41 cents. But the company did lower its guidance. So for Q3, it said it was looking for 415 to 420 $1 million in revenue. That was against their estimate of 439 million. So came in about $20 million light there. The full year revenue also came in below expectations as well. So beat on both top line numbers, but then again gave that weaker guidance. Stock dipped down to around 350. That must have been, or 1350. That must have been when you guys were on the closing print.
Lower than that, man.
Really low.
Yeah, went to 1255.
What
Holy.
games does Unity?
Kind of, we talked about this one. Dennis gave you the good setup on the downside. I just don't know how you could have caught. I mean, you just would have been throwing random bids out, random numbers, because the stock has never been anywhere, has never been this low before. So
Yeah,
I'm not
low.
sure it's client. Yeah, so you can back and fill whatever you can say today. But, and I know it's not, and I'm still going to stick with my analysis from yesterday. This thing needs a 15 bid. I know this is the daily. I know it's bunched up here. I know it's consolidation. I see 4 highs in the same area and even kissing in the after hours. So if you want to keep your hands clean on this one and not try and buy it on weakness, who knows if it catches a bid there, a 15 bid, I think it has some room on the upside. But
this isn't the stock that you're
no.
looking, unless you break up. So I'm torn on it because I think the reason it's not down, people are looking at this quarter and saying, why is this not down? Is because the bar was so low on this one. The bar wasn't just on the floor, it was in the ground. And when we see stocks stop going down on bad news, it means they're washed out. Think CVS. CVS report wasn't great either, but the stock held on. The stock sold off initially on the numbers because the algos are stupid and they just see, miss, sell. And that's who, gets hit on this.
The guidance too.
And the guidance. They see miss guidance, miss this, sell, and they hit the thing down 10% last night. And it's back. And if you're wondering why it bounced back, it's because you're right. It's all priced in. I mean, it's just been an awful place to be. It's maybe my best trade of the year. Remember the trade I did, Joel? Do you remember this one? Beginning of the year, I think it was January the 7th, beginning of the year. And what I did was I traded in my Unity and sold it at $39. It was the day that they announced all those job cuts. And it was like 25% job cuts. And job cuts can sometimes be bullish. And the stock was trading higher. But I'm like, they're cutting not, to just cut costs. They're cutting out of necessity, out of demand destruction. There was different reasons for that cut. And it was $39 that day. And I think it was January 7th. And what I did was I sold my Unity.
You bought
And
NVIDIA.
I went and put that money in NVIDIA. More NVIDIA. I bought more NVIDIA. So I sold Unity at $39 that day. And on the split adjusted basis, I bought more NVIDIA, I think at 55. That's my best trade of the year. And again, I took a loss on Unity because I was in from like 42. And heaven forbid people take losses. That's the best loss I could have possibly taken because this would have been a portfolio destroyer. And actually, I turned around and doubled my money in NVIDIA on that capital that I took out of Unity and put it into NVIDIA. So moral of the story is cut the losers. When the story changes, the story, goes south. And the story changed when they started charging. Remember, they started charging.
Yeah. Then they
without
tried
one,
to back off at
adding a fee. Then they tried to back it off, and they got rid of the management. And I think the CEO, I think it was the CEO, and they've been trying to fix themselves ever since. And it just hasn't fixed themselves. So moral of the story is don't be afraid to take losses when your story changes or if you get the story wrong. Sometimes the story doesn't change, but maybe you get the story wrong. You can always change your mind. It's okay. It's okay to be wrong. It's not okay to stay wrong.
Just real quick, I'm going to go ahead and share my screen from this website, Kathy's Arc. This shows Kathy's combined holdings across all, let's see, 1, 2, 3, 4, 5, 6 ETFs. The combined holdings, Unity, the second largest holding. She owns about 2.82%. The cost average for Mrs. Wood here is, what just happened? Hold on.
I think you just scrolled down to another one. There you go.
I know, I accidentally. Okay, so wait. So it's 7.32% of her portfolio. Her cost average is between $99 and $104. So
no way.
I didn't even know it was that high. When was it $104?
She was probably buying it in like 2021. Remember when Roblox got up to Roblox?
Horrible story.
Yeah. So I mean, Kathy's got that one. She's got, let's see. She's doing pretty well in the trade desk. Her cost average is $75. That's up to 97. Let's see. And what other things is she up on? All right, Meta. She's
Let's
up
look
on
through these. So this is a really cool. I never knew this site. So this is her biggest position, Shopify. I kind of like Shopify. I don't mind that one.
Well,
Let's just go through her top 10 positions.
She's down about 50% in that. She bought at 120. It's down to 66.
Well, she doesn't buy them good, but I kind of like the stock down here. Good Canadian company. Unity, I don't know. It's washed out, but holy mackerel, that's just been a disaster story. DraftKings isn't a bad one. I mean, it's just been a disaster story here too, though. Like it's been leaking. Cool. Trade desk isn't that bad. Moderna, I don't know about Moderna now. You're moving it around. I can't read it. Meta. Okay, so she's actually starting to maybe. You know what I've noticed lately, Joel? She's actually been selling some of these small pieces of crap that she has and buying mega cap tech. She's been selling some of the small stuff. If you look at even her positions from last night, I don't have them up here. But she's starting to realize that, maybe I don't want to be in all these small little pieces of crap technology companies. I actually want to be in some of the bigger ones here. She's still got NVIDIA. You're moving around so much, I can't read it.
NVIDIA, well, she started adding NVIDIA recently during NVIDIA's big run up, she missed the whole damn thing. Yeah, she missed the whole damn thing, and now she has. I mean, NVIDIA is making up 2% of ARC's total combined.
What's her cost basis on NVIDIA?
I don't know because this thing's messed up because it's showing it without the split because obviously 529.
Okay, well that's 52, correct. So that's pretty good.
So yeah. Well, I don't know because I don't know. I don't think she got in at whatever the 149 would be split adjusted. I don't know. Either way, she does have, to your point, Dennis, in her top 12 holdings now has Meta, Tesla, NVIDIA. So some of these big name tech
Some of the big names. And you know what? Some of that is just because the little names have fallen so far that the big names have moved up as their biggest holdings. You know what one I don't understand? And I was just looking at this last night, and I've trashed this stock basically since birth, calling it TiVo Part 2. I don't understand Roku. I don't understand Roku. The market cap on this puppy, that's not that bad actually. It's 8. It's only 8. I'm
Seven.
having problems
Yeah.
with that. It's 8 billion. Okay, it's not as bad as I thought. I thought it was higher than that, the market cap, but it doesn't make money. But I don't know the fascination with Roku. Like she's got this fascination where I see her buying Roku all the time. She was at least for a while there. I don't totally understand the fascination with this because I've argued this before. I'm like, it's incorporated into the TVs. It's not disruptive anymore. I mean, yes, it's Roku sometimes in the TV as well, but I just don't feel like, I kind of just feel like this is just this, like until they get something else, I don't feel like this
You
is
never
like,
hear anything about it.
I don't feel like it's disruptive anymore. It's like you got your Rokus, it's in your TVs. There's competition coming because they're putting smart TVs in everything now, and sometimes they're not Roku. I don't totally understand her fascination with this one. I don't like this company.
Is she still in Teledocs?
Well,
Oh, I think so.
speaking of Teledocs,
she has been selling it lately, though. She's actually been taking the loss on it. What a disaster. Is there any disaster bigger than Teladoc? $300 a share to $7. Sorry, I guess it's pick on Kathy Friday, but man, this stock has got to be one of her worst, if not the worst pick. And she was buying every dip all the way down. And I think, if I'm not mistaken, chat, you might be able to help with me. I think she started selling it recently. I think she's like, okay, I was wrong. You're selling when you're down 98% on it here. I mean, is there even a point at this point in time? I guess you save that last little bit of money. But holy, she has just been the worst stock picker of stock pickers.
Well, here, I'll try to spin zone this and try to defend Kathy here for a little bit. Joel, pull up.
Please, defender, please. Find the defense.
Pull up Docs, DOCS, real quick. That chart for me. So Doximity is a competitor to Teladoc, reported earnings last night, crushed it out of the park. 28 cent EPS, beat the 22-cent estimate. Sales 126, beat the 120, raised guidance. Stock trading up 30%. You look at this chart. I mean, this stock, she was right about telehealth, and she just picked the wrong company. So,
what's her average cost on Docs, though?
Well, I don't know. She's
this
in
stock's
Docs.
down from the highs too. This was $107, so we can give her day where it bounces 29%.
Yeah, I'm just saying that
day.
this was a good report for the industry, for the telehealth industry. So maybe she was on to something there. She just picked the wrong name in it. So her whole
this one, I have this one. This was a Lisa call.
You own
this is good, man.
It's good when it went, when we got it in that like 45, and then of course you can't sell it when it goes to 107.79.
She never likes to sell. She doesn't sell.
No, she doesn't sell at all, and then it comes back down. And when we originally bought it, we were going to buy another, we bought a half a position. I'm not sure what the cost is, but I'm not going to buy that other half today with it traded up 765. That's a big move. Pre-market high 34.40.
I tried. It wasn't maybe the best defense argument for Kathy, but so Joel,
it's a tough job. It's a tough job.
It is.
Joel, when
I have that same job.
When Lisa,
by the way, just not with other people's money, just with my own
with
money.
Your own, yeah, to be the defense.
Now everyone wants to bring up the Peloton. We know this. We've gone over this 150 times.
It's not Joel's stock; it's Lisa's stock.
But Joel, I mean, correct me if I'm wrong, but if Lisa likes a stock, and maybe you might not love the setup, but to you, I mean, you'd rather just say okay and not have that argument and let her.
Hey, we don't argue. No. And then it's pretty much if I say buy stuff, she says fine, and she says buy stuff, say fine. If we say sell stuff,
it's not worth it for you to get.
I tried to get her in on Monday morning, and I'm like, man, we got to look here. We've been and market, and she automatically assumed I wanted to sell. And I'm like, no, there could be, this could be a good day to buy. And then, of course, it was a good day. I mean, we didn't pick up anything long term, but it was a bloodbath. It was, it was a time to buy. No, Lisa's not Intel. That's old me, Jay. Man, you guys are great.
Me and you, Joel, are Intel. And I just bought it recently. I got suckered on that 30 support level and then the earnings. And then, oh my gosh. And I also got suckered that, I think it was a Trump stock. I got suckered into this puppy here, and that's my worst stock.
Which one?
Intel. You
Oh,
know,
I
I was
thought you
buying
said
off
Trump.
that
Oh, I thought you
30.
said Trump stock. I thought you were talking about
Intel. We remember we were saying because he wasn't going to defend Taiwan. He said he was lukewarm to defending Taiwan.
Yeah.
Intel popped that day, and then Trump was way up in the polls. Now Trump's falling off in the polls, so it's like, oh, and I don't even know if I want Trump stocks if Kamala wins. And then the stocks come off here. This has been just an epic disaster, and and this is like recent. I wasn't even in this thing 3 months ago. Recently bought it off that 30, and anybody else who bought that 30 just destroyed. Should just eat the loss and move on, I guess. I'll sell the bottom. I suck at Intel. I did this before too. I sold it. I took my loss. I'd take it at the same trade almost. I think I took like 36 and ended up selling it like 28. And then the thing ran to 50. And I'm like, why the hell you can't take losses? Don't take losses in the long-term portfolio. They come back eventually. I'm saying to myself. And then, it's come all the way back down. I rebuy it and then I just take the loss again. All right, don't follow me on Intel. Intel, I suck at trading.
And Mobileye, have you seen this Mobileye?
And that was an Intel spinoff too. And remember, we used to complain. Remember when I had the Intel the first time around and they beat the crap out of me? I was complaining that I didn't get any shares of Mobileye. They're like, oh, you still own them through your Intel position. Well, I want to control my own Mobileye position. They spin something off and don't give the shareholders any shares. That's the worst spinoff ever. The management's just management. Honestly, if you had to rank management, think about where Intel was 20 years ago. And just say, where Intel was 20 years ago, and then say we're all going to be AI and chips are going to be everything. You'd think Intel's the most valuable company in the world. They've been the worst run company in the last 25 years by a country mile, because this is just incredible. The AMD was at one point almost bankrupt.
A buck,
and they turned around and ate all their market share. And on the processor, all my Intel processor does is go, and it's just making noise all the time. You give it one website to open, it sits there and makes noise for 5 minutes because it's trying to figure out how to open the website. By the way, I did get a new Ethernet cord, and I think I'm better now. Have I been cutting out? Somebody said get the Ethernet cord.
No,
I think I'm better with that. So it's a little bit to do with maybe my Ethernet cord I was on a 5 and not a 6. But the Intel processor on this HP just makes sound continuously. Like it's thinking. And I have another one over here that's an AMD, and it doesn't make any sounds at all. So I bring up the page, it doesn't even open up. I bring up a web page and it goes, it's clicking like it's thinking. I don't know. Maybe I've just got a lemon, but I am very disappointed with this Intel product.
All right, then a slow, steady leak here. It just came down and just made a new pre-market low here. Big tech leading the way. On the downside here, I see IWM still clinging to a small gain here. So
it's mega cap tech. So if you want to know the reason why we are rolling over, one, we know the EWJ is down, and we talked about that already. It's down almost 1% now. Again, ignore the last because the last is a stupid Robinhood prints. It's down at 64, offered at 64.92, which will be down over 1%. When the EWJ started leaking, we started leaking as well. But look at the leaders on the downside here today. You got Microsoft just turned red. Meta is down $7 here now, getting hit pretty hard. Goopster is down $3 here, getting hit pretty hard. Netflix is down $5 here, getting hit pretty hard. Tesla's down $1.30. Apple has now turned to the red, and it's down $2.30. AMD's down $1.33. All the mega caps are down. Is there any one of them that's up? I think they're all red.
Nvidia was up last time.
Nvidia's went to the red too. Nvidia was up all night. Nvidia's now went to the red too. So you're leaking. And again, this is not to be unexpected. We're so inclined, like we think bulls, it just go up. We're so spoiled when we didn't have that 1% down day for 300 or 2% down day for 350 consecutive trading days that it made everybody think the stocks just only go up. Well, it's not the case. Now we're in a choppy environment. So the VIX is elevated. So don't chase. If you're getting a dip today and you missed yesterday, maybe you're going to use this.
Where do you go? If you're trying to buy the dip here, where do you go? Do you lean on yesterday's lows?
I don't know where you lean, Joel. It's tough. You're up a long ways from those lows.
Yeah, someone just asked about Lilly, and then we're going to bring our esteemed guest on here. I just felt that was a sell all day yesterday. Now, 858's halfway back of this move, ended up being a red candle. It went to 877.78. So I just think the big boys just had their offers out there, 5,055, 5,060, 5,000, because you got that strength. So I mean, if anything, if you're looking for more upside, I like to see that gap protected. but it just seems too wonky. You know, that's just got a lot back quickly. So there's a look at Lilly. But it is time for Craig Johnson, managing director over there at Piper Sandler. This is what we've been waiting for all week. Roll the intro.
Let's go ahead and bring Mr. Craig on.
Mr. Craig Johnson, how you doing?
How are you guys? Can you hear me?
Yeah, we can hear you loud and clear. And I guess I'll start saying that you can't say you didn't tell us so.
We've had this discussion, that is for sure, about talking about all these Mag 7 stocks and those kind of names. And, you know, right now, I know you probably have a younger audience, but you got to go back to the REO Speedwagon days, the 1978 song, Roll with the Changes. And that's what I think all our investors need to do at this point in time, is to look at how this market is changing, change how you want, what things you want to trade. Now, Joel, put up on your screen a picture of CBOE, and then let's also look at ICE. I mean, if we're gonna see a spike in volatility in this market, you want to know what to trade? Let's trade that, because it doesn't look like volatility could be, you know, hurting these companies at all, right? These charts look pretty good.
Okay, real quick, small tangent, Dennis, I'll let you go. My first concert I ever saw was in 1978 at the Toledo Sports Arena. And you know who it was?
REO Speedwagon.
You got it. Okay. All right. I had to get that in there. Triple D, go ahead.
I mean, this is the trading trade, right? Where you've got volatility up, more trades occurring, volumes are up. So naturally you start seeing stocks like the exchanges start to move higher here too. So it's a good call. Do you think, the question is, if you're chasing this, you're basically making a bet that the VIX is going to stay elevated. Do you think the VIX continues to stay elevated here though, Craig?
I think the VIX can stay perhaps above its 200-day moving average here for a while. I also think there's going to be a rotation in this market from the generals down cap. And I think as that happens, you're going to get a choppy trading range. And I'll show you that chart in just a moment. And as that happens, I think it's going to benefit a lot of these, exchanges out there, and probably benefit them for a while. I'm sort of looking at this environment right now, guys. And there's a couple things that I think we got to put into perspective. And can I share my screen? Would that be
Yeah,
okay?
please.
Yeah, sure.
Okay, so let me hit the present button and share screen.
CME's a little bit of a laggard. I just pulled that chart up for the exchanges.
And FXY, folks, is having a pretty good rally here. So if you want to know, FXY is now trading up about 0.4% here if I'm looking at the bid and the ask. That is not helping the market here either. FXY had a quiet day yesterday, but it's starting to rally a little bit here. And we know this market's right now inversely correlated with the FXY. Craig is showing his charts here now. We're just talking while he was bringing up his charts, waiting for those.
Yeah. So you guys can see this now on the screen. The point that I want to make for the big picture trading setup for people thinking about where do we go from here? Since 1987, we've had basically 20 sort of major breadth thrusts in the market. I define that as how many of our industry groups that we follow here at Piper Sandler are above a simple 40-week moving average. I found from our work, there's been 20, 16 have been fairly short-lived, 4 have been very long-lived that we have ultimately seen. But the one that I want to zoom in, or a couple that I want to zoom in, are these big periods. The .com market low, market breadth got crushed, expanded dramatically. Same with the great financial crisis, same with COVID. But look what happened when the market broke out in 2012 and 13. Look at what happened to the overall breadth of the market. Guys, it stayed high. It was choppy. It was great trading, in and out, in and out, in and out as this thing traded. But here's the other thing is your average stock really started to participate. Yeah, my indicators flipped positive, negative like 6 times in 2012, 2013 period of time. But we went sideways for 18 months, and then small caps and mid caps worked. Look what we've done now. It's been 2 years that has been the case. And everybody keeps focusing on the generals in the market. And as I come back and I keep thinking about the generals in the market, let me throw up a couple other charts if I can. But as I go through and I think about these generals, thinking about NVIDIA and some of these other names. I'll put the daily charts up. But at this point in time, I've got no outside candle as I look at this chart. I've got lower highs, lower lows. Your 200-day is still sitting down here. And everybody has been pregnant these stocks for a long time. And I sort of worry that not even Microsoft can stay above its 200-day. You look at Tesla, we look at Amazon, we look at all these names. There's a lot of money that can continue to keep leaking out of these large cap stocks and go down cap, guys. That's the point that I'm trying to make to people. And if you're trying to find something to trade that you can make money with, again, I'm going to come back CBOE, I'm going to come back to ICE, I'm going to come back to some of these kind of names is how I think about it.
Is there a place just to sit on the sidelines and maybe sit it out for a bit? I mean, especially if you're in the indices, because if you think the generals are going lower, the S&P is going down. I mean, there's no doubt, because it's 40-50% generals really at the top of it when you really look at what, makes up the S&P. So if you think, we are going to continue to go lower on the generals, do you just move cash to the sidelines if you don't want to play the small stuff?
So what I think is, so let me answer that question specifically, but I'm going to say this first. As this sort of rotation takes place, it's going to be choppy. It's going to be choppy. We saw that in 2012 and 2013. And this is where it's like the generals kind of get pushed down, you push your mid small caps up, and then you kind of reverse it. And you kind of keep coming back. It's going to be an interesting trading environment from that perspective. Do we have to see this market completely implode? I don't think you really do, because this is where your average stock can start to pick up. It's not going to be perfect. Yes, no question, the generals are 30+% of the entire market. No doubt about it. But they're not all going to go down at the same pace. It's not going to be one for one of those things happening. Like we've already seen the Tesla already correct, right? And therefore, we'll see other things sort of pick up and offset that to a degree. But here's the thing is, in my world, I can't just sit on the sidelines. I got to think about something else to go do. That's where I come back with ICE or, some of those kind of names that I called out on our, institutional call just a few moments ago. I'll give you a list of these, right?
Yeah.
So things that I called out for actionable ideas in mid-cap land, 20% top line, 20% bottom line growth. Take a look at ALKT. Okay. This stock is breaking out of a base. Take a look at Granite Construction. Take a look at Providence.
Granite Construction is going to benefit from an interest rate cut too.
It will definitely benefit from that. Also,
what's the symbol on that one?
GVA.
GVA. Also, take a look at Provident Financial Services. I mean, this is an interesting downtrend reversal. First improvement in the relative strength, in a long time. And by the way, if people like these charts, shoot me an email, craig.johnson@psc.com. I send these out for free on the weekends if you want to see them. They're not marked up, but it's entire books of the market. Also look at PLMR. What a great sideways consolidation for 2.5 years, and we're just starting to break out. There's definitely things to do in this market. Stepstone Group. Also look at, this one's already had a pretty good move. Look at, take a look at Clear Secure. I mean, interesting downtrend reversal, small cap company. Again, with about a 2.7 billion market cap. Doesn't just have to be about the generals. There's a lot of other things that we can definitely go out and look at.
How are the valuations on these things? Because the one thing that keeps me, and I'm a trader on my day job, but I'm a long-term investor, and I've always been a value type of guy. And the reason that I've sold my Apple and sold my Microsoft and sold most of my NVIDIA is I just can't stomach paying 34, 35 times earnings for these stocks. I just feel like I'm paying too much for those earnings when these things were trading 26, 27 last year. And, and if I go back to Apple 7-8 years ago, was trading 13, 14 times earnings. I feel like it's a valuation issue here more than anything. How are these valuations on these mid-cap stocks?
Well, let's talk about that, right? Because that's a great question. So if I look at the SML, which is the S&P 600, okay, right now on 2025 earnings, and again, this is now that we're basically through second quarter earnings, we got to start thinking about 2025 numbers, right? Because we're already in the third quarter and you're thinking about 12 months ahead. What if I told you, Dennis, that on 2025 earnings, you're trading at 14.2 times, okay? And if you're looking at what is the growth rate year over year, because 24 earnings were pretty weak, you're talking about 24.48% growth, 25 over 24 at 14.2 times. If I go all the way back to the mid 90s, I can tell you that the median multiple is 22.8. You're trading at a discount as you go down to the 600. Excuse me, as you go down to the 600. And if we look at the mid cap one here too, you can see that in terms of mid cap, if I can get there, here we go. If I look at the mid cap side of the world, you're trading at 14.7 times 25, and you're looking at a growth rate that's about 18.89. Now, again, you're trading at a discount to the longer term multiple that you've had, which is 19.8. So again, compare and contrast that, Dennis, with the large cap guys, which right now, let me get to the top of the sheet.
This is great.
And I love just crunching data, but you're trading at 19.3 times. The median post World War II is 16.5, and you're looking at a growth rate that's 15.02. You've got better valuation, better growth down cap than you do in the 500 at this point in time, Dennis.
How much of this is ETF effects too, where every ETF, every new one that gets launched wants to have Apple and Microsoft and Nvidia as core holdings, and then they go and they raise the money, launch the ETF, and go and buy those stocks again. How much is this ETF effect driven, just valuations to have this gap?
There's definitely some of it. I mean, there's more ETFs out there than there are individual equities now.
Isn't that crazy? That's a crazy stat in itself.
It's true. But, what has really pushed up, I think, these larger cap stocks that everybody has been sort of in and played and love at this point in time is you've had the carry trade, right?
Yeah, that's right.
Borrow cheap in Japan, bring the money back to the U.S., go buy something, lever it up and play it. It doesn't have to be currency to currency. It could be borrow whatever you want over there. And there's certainly been discussion that a lot of these Mag 7 stocks were sort of tied up into this carry trade. I mean, Jamie Dimons talked earlier in the week that it was half unwound after Monday's decline. And then later on, I think it was yesterday or Wednesday, talked about 3/4 of it being done. So if we're going to have a good chunk of that carry trade sort of unwound, equities could get a pretty good, snap back. And if I look at the S&P 500, we got a pretty big area of support right in here. And we're still above the 200-day. And here's a crazy stat for all of you, out here today. Okay, I just published this week. And one of the things that I want to point out to people is this. I've only found since 1990, okay, basically the inception of the VIX, there's been 10 times where this market has been above its 200-day moving average and the VIX has been north of 30. Look at your forward returns. 1 month, a little weak. Median return is 2.94%. But look as you think about this 3 months out. What if I told you, Dennis, that you got a 78% positivity rate and you've got an average return of 4.19%? You're probably drooling.
Sounds pretty
even
good.
better when you get out 6 months from here. So the point is that the big money guys that we're having conversations with, they're not going to be day trading this market. They're looking out 3 to 6 months and positioning for that. They're probably going to be buying some of the dips, not selling the rips at this point.
Just on the yen carry trade, I mean, you had things in your forecast, right? We were trading so far above your yearly target. I mean, any other clues or any any insight on that? I mean, you didn't even no one mentioned it. I mean, it happened in the middle of July. Is there any time you did see some capitulation on Monday? You could tell people were just yakking out those positions. Is anything else? I mean, I always like to look for the market to calm down, right? And the average daily ranges come in. So it's hard to be real confident in a bottom until at least you get some of this volatility to come down.
Well, I mean, with the volatility can create some interesting trading. It's just super hard to get on the right side of some of that trading. And you got to go real short term, 15 minute, 30-minute charts, throw all your technical indicators on there, like slow stochastics or RSI will be some of the tools that I will pull out of my, tool chest if I'm going to go trade some of those things. And I did trade some of those things. But, the other thing to think about too, Joel, is what's going on with interest rates. For the first time in almost 2 years, we almost have a normal sloping yield curve. And what's interesting about that is when you get a normal sloping yield curve, it's not very long after that the Economic Cycle Bureau comes out and tells us we've had a recession. And when we're told we're in a recession, stocks usually move up and move up quite quickly. Multiples expand. These are all sort of the positive things that are sort of in the future coming in front of us. And not only that is the Fed's going to cut rates. And when they cut rates coming up, let's just take a look at the history of what rates tell us. If I look at the first rate cut and I look forward 6 months after that first rate cut, what if I told you your average return is 6.57% if we are looking at that first cut in September? Everything sort of aligns to say that a lot of this negative backdrop very well could be over by April, May timeframe of 2025. And again, as investors, not say day trading individuals, but longer term portfolio managers, they're going to be more likely to sort of look across the valley, and they're going to probably be dips. So don't get too carried away trying to be overly short this tape, because you're going to have the bigger money guys out there looking. Buying on.
Yeah. And so, you're on target again.
Okay, go ahead, Joel. Go.
You're in target, and then you go, Dennis.
Year-end target for me is 5,800. I recently changed that from 50/50 to 5,800. Again, the sort of breadth thrust that we saw in the market a few weeks ago, where these large cap stocks were down and the mid cap stocks were up, speaks to this chart 100%. And by the way, again, the only other time, and I stress this, the only other time that I saw this happen was basically right here. And I'm going to pull this other chart up for you. And I want to pull it up on a monthly basis, right? Because if you look back to this period of time, don't forget about the big picture. I know that we can get caught up in the shorter term, part of this market, but look what 2012, 2013 was. You finally broke out to all-time new highs above your 2000 and your 2007 highs. Like, don't forget that. And what we've seen so far is in this market, look at all these charts. If we're thinking about trading this market, and again, put the long-term perspective in play to help you understand what direction you should overall be trading this tape. All we've seen so far is breakouts above the prior old highs of 2021 and a pullback and a correction. Shouldn't we as traders be wanting to buy pullbacks, confirmations of support when that happens, and the move starting to move up should be the safest entry point for trading? Just put that into a bigger term perspective as you think about this market.
Craig, I just want to talk about your year-end target here, and then we're going to let you go. 5,800 on the S&P year-end target. If the generals are continuing to roll over, though, how do you get to the 5,800 target without the generals?
I think you're going to start to see the weightings of the generals come down. You're going to start to see a lot of other stocks start to move up. I still think you can get there, and it's not.
Yeah.
And the generals don't have to completely implode. I mean, it's not like Apple's business model is going to zero here, right? I mean, what if the chart of Apple just goes sideways, right? And all of a sudden other things start to pick up. That very well could be the case. Apple could be sitting here in a range between 198 at the upper end of the range to 164. You sit here stuck somewhere at about 180. Again, that's not an implosion for the entire market. It just means that they're going to become the laggards. They're going to come from the Mag 7 to the Lag 7, and they probably end up stuck in this range. You probably do the same thing with the Meta. Again, all we've done with this name is go sideways now for months. That doesn't mean that the market has to implode.
Craig Johnson. All right, I'll wrap it up. Craig Johnson, managing director over there at Piper Jaffray, giving us some spot-on analysis. Craig, we love having you on. We'll dial you up again real soon.
Thanks, guys. Have a great day.
You too,
Thanks,
Craig. Enjoy your weekend. All right, guys. Craig Johnson again, CMT from Piper Sandler. Always good to get Craig on the stream. He came prepared with many charts and stats today. We love that. All right, guys.
And if you want to, and follow, because he was talking about the 600 and the 400 S&P. The S&P 600 does have an ETF that tracks it. It's thin, so just be careful when you're trading it. Very thin in the pre-market. IJS, basically no pre-market at all, so you'd have to wait till the regular session to try to buy it. And then if you were looking at the IJH, that's the S&P mid cap. So there is two ways. IJH has a better market. The HFTs are out there in the pre-market there. So you have a little bit better market in that one where it's a little bit more liquidity there. But if you're looking at directly playing some of these that Craig was just talking about, there's two ETFs that track both of those indices.
And it makes sense about, with the big caps, just kind of like, the Mag 7 just kind of hanging in there. And then the other 493 stocks in the index kind of smoothing things out. So great analysis from Craig. Would thank him once again.
Craig's always good.
All right, guys, we've got about 5 minutes of the show left. Let's go.
Yeah, so, we were talking FXY has rallied slightly. That is why the S&Ps have rolled over. EWJ also leaking. That's not good for the news either. I wanted to talk China here just for a second. We haven't talked it for a couple of weeks here now because obviously our markets have taken the front row seats here. But FXI is perking up here a little bit. And I mean, we're talking about with Craig, the laggard trade. We've looked at this Alibaba a few times, AB. It's back to where we bought it around, at least where I bought around $80. It's come all the way full circle here now.
Well,
is there finally a time where this stock could actually, we're going to talk laggards, talk cheap PEs? Here's Alibaba trading, and I'll just go to my trusty Benzinga Pro and bring up the valuation 9 times forward earnings. Is this the time that Alibaba could actually, start to show some life?
Well, you know what $80 means for Alibaba, right, Dennis?
Usually a sell.
I was going to say it means it's going back to 70 pretty.
Yeah, this is what happens. Every time we start to think, it's starting to look interesting, it just rolls over again.
Look, I'm not going to say it again because
Are you in it?
Yeah, I've just talked about it too many times to where I'm like, this is like a no-brainer buy. Again, if you have a long-term time horizon, but now I've accepted that I don't even know if that's true. Like it could be, it could still be at $80 5 years from now. It could be down at $50. It could be at 70. I have no clue. But from a risk reward standpoint, which is all that investing is, there's to me the return outweighs the risk here. If things go well and China doesn't invade Taiwan and we don't have a big fallout with China, then I think you do have some good reward here for the risk you're willing to put on. But again, I wouldn't tell anyone to go out and this is a for sure buy, even if you do have a long-term, time horizon, which I do. And I am going to be patient with it, So we'll see.
And Chad asking about Pinduoduo, which has obviously been firing on all cylinders over in China. There's not a lot of PDD we're talking. There's not a lot of stocks that have actually, performed as well in China as this one. This has probably been the best of breed over there as of late. PE forward on this one is only 11.8 as well. So you're talking low PE stocks here, significantly under market multiples. And PDD has been growing. And actually, unlike Alibaba, I know we had the big sell-off in 2020. But in the last, 2 years, we were bottom at 23 or 138. Here's a stock that actually a company that's really firing on all cylinders here too. So it may not be a bad one either. And I mean, if you just want to get exposure to them all, maybe you're just looking at the FXI. But again, if Taiwan gets invaded by China, Katie bar the door, these things all fall 50% on you overnight. So, I mean, maybe that's why they trade with the low multiples. It probably is.
Yeah, it's funny how the narrative changes, with the markets, and a lot of it was China, tariffs, whatever, trade wars, and then of course, a big focus on interest rates, and now the yen carry trade. Just as far as looking at the FXI, I mean, it's looking, it looks like it has a little bit of a base here. If you're longer term, well, you can risk maybe down to the low for the year, but it's having a pretty good year. I mean, in perspective, it ended last year, 2403, took a dip. It's doing okay. I don't know what we need the government fully behind these companies instead of really.
Well, that's a problem too. When the communist country, you get capitalism doesn't thrive under communism. So, I mean, this is maybe a main reason there too. I'm freezing up. Is that me?
No, you're good.
You're good.
I was good the whole time?
Yeah.
Okay, Joel froze up there a little bit for me. So as long as you guys are hearing me still. Again, somebody said, and a shout out to the chat who said, get the new Ethernet cord. And I did look, I'm running 5s. And I changed this to a 6 a couple days ago. Seems to be working pretty well. So, maybe that's helping. So maybe I'm blaming Intel a little bit too much, although my Intel processor still just makes noise continuously. Like it's thinking. It's constantly thinking. What does he mean? Open a web page. Go ask somebody else. What does this mean? I think that's what's thinking internally.
All right, real quick. We had a couple more earnings. We had Expedia report earnings last night, ticker EXPE. EPS came in at $3.51. That beat the $3.06 estimate. Sales came in at $3.55 billion, beat the $3.53 billion estimate. They did talk about some softening travel demand in July and more, but either way, strong quarter for Expedia, which actually is a travel company. And, more further signs that like the airlines are just not great investments. It doesn't have to be like, oh, the airlines are down because people aren't flying anywhere. No, that's not the case. The airlines are down because they just don't make a lot of money. They suck.
Dip gets bought here again. So if we go to Expedia, we did get hit on the initial numbers. We were down here for a good 10, 15 minutes before they finally decided to start buying this. So it was a buy the dip market on the earnings last night. Besides Alpha, we had Take-Two, which we didn't even talk about. It had the earnings pop. It had the drop and then the pop. Unity had the drop and the pop. And then obviously Expedia had the drop and the pop. And those are three of the main companies that reported. So lots of dropping and lots of popping last night afterwards.
All right, well, that brings us to 9 a.m. I don't know if you guys have anything else. I mean, it could be, it's kind of quiet out there right now for how crazy this week has been, really. I mean, we have the S&P 500 trading down about 0.3% as we head into the open. The Qs down a little bit more than that, about 0.5%. But either way, it was a crazy, volatile week. But look, we made it through. Monday morning, if you would have told me, hey, we're going to end the week pretty much flat on the major indices, I would have said, yeah, I'll take that. I mean, as ugly as it looked Monday morning. So, I guess it was a good past few days for the Bulls that brought us back. We'll see if the Bulls can come back and buy the dip again today.
Yeah, where did we close on? I'm just looking to the week. So we closed at 532.90. Obviously, and then we had the awful Monday. So we're only 30, 40 handles, and that's a victory because obviously after Monday,
for sure.
When we were down 200 handles that day, I mean, that was one of the ugliest days of the year, if not, well, the ugliest day of many years, I think. So it's been a victory for the Bulls, but we've come back a long ways here now. So now I feel like if you're buying stocks here, we've rallied significantly from those lows. So I'm like, I just don't know if I can bring me to chase the stocks here. And maybe we should be looking where Craig was looking and maybe looking not at the generals. Maybe the generals are tired. Maybe they do lag. Maybe their valuations are too high. There's lots of good, questions, to be answered here. So I think, I'm just looking good companies, reasonable valuations. And again, I stay away from Apple and I stay away from the Microsofts because I can't stomach paying over 30 times earnings for companies that aren't growing very fast. Maybe that's going to change. Maybe Vision Pro is going to take over. Maybe, ChatGPT or Microsoft's going to figure this all out, but expensive stocks.
Just overall, I mean, echoing what Dennis said, the close last Friday was 53.76.50. You got in with 4 handles of that in the pre-market. Now it's a ways away. So I don't think you're going to get the rip, buy craziness off the open right back. I think your high of the day is in. So if you're looking at your stocks, look at the mark or look at yesterday's highs because I think they're going to have a hard time getting back up there. And then on the downside here, I wish I could give you a good number, but even the intraday low from yesterday is 60 points away from here. So if you're trying to buy the dip on this stuff, if you see identifiable level, don't give it I don't think it's a day to give it a lot of room on the downside. And then on the upside, if you're looking to sell, once again, look for the mark because it's crazy week, crazy price action. People are going to be taking a deep breath, and maybe we can start to calm down. On Monday, we're going to have Joe Saluzzi join us talk about what he's been seeing in the markets.
Woo! All right, guys. Well, thanks for everyone who tuned into Pre-Market Prep this week. Shout out to our special guests. We had some great ones this week. And then make sure, like Joel said, come back on Monday for Joe Saluzzi. Hope everyone has a green Friday and a great weekend. We do have live trading starting up after this. We'll see you guys on Monday.
Yeah. So everyone can make fun of me some more. I won't be here on Monday.
Oh,
I'm swimming in the
again.
No, I was wrong when the meet was. I'm swimming in the Michigan Senior Olympics.
Man.
So if I'm not
Wow.
here on Tuesday, you'll know I swam too hard. Okay.
All right,
Okay,
we need
well,
a
good
gold.
luck, Joel.
We
Good
need a
luck,
gold
Joel.
medal. We want to see you come on the show
Yeah,
on
the
Tuesday.
gold
with
medal.
us.
Yeah,
He
I'll
comes
get a
on to
few.
show and he's like, I still got it.
Yeah.
I still got it. Yep. Okay.
Michael
All right.
Phelps, Elconin. All right, guys. We'll see you guys on Monday.